Hello, hello, Jamie here. Hope everybody's doing well. I am Jamie Trull. I am a CPA. I'm also a financial literacy coach and profit strategist. And this video is currently live streaming. So this is a live stream video from Facebook. It's a Facebook Live on both my business page, Balance CFO, and in my Financial Literacy for Women Business Owners Facebook group. If you're not a member of that, come on over and join us. We're talking about all things stimulus right now with lots of information. I'm answering all your questions in there. Additionally, this is streaming on my YouTube channel as well. So if you have not gone over there and liked and subscribed to my YouTube channel, I would love it if you would. Okay, so people are joining right now. So hey guys, say hey when you're here so that I can make sure I can see you. Today, hey Bree, I see you guys joining. Awesome. So today we're going to be talking specifically about this new application for PPP forgiveness that just came out on Friday. Okay, so that's really what we're going to focus on today. It is a doozy. There's a lot of new information in here. There are a lot of clarifications that we've been waiting for in here. There's also some things missing from here. There's some guidance that we still don't have. So we're still waiting on some answers. So I'm going to talk through all of that right now and what you need to do right now to make sure that you're tracking things. If you've gotten those PPP funds and you're trying to figure out how to do things and you want to make sure that you're doing it the right way, we're going to talk about all of that too. So real quick at the front of this, I do want to mention, because a lot of people have been asking about the fact that there are some potential changes that may come up. Nothing has been passed. We don't know if anything will be passed, but just to make sure you know, right now, Congress is talking about making changes to this program. So as you've probably seen throughout all of this over the last, 6-ish weeks or so, this has been kind of an evolving thing. So I come and tell you guys what we know when we know it, but it changes so fast. So you have to make sure that you're keeping up. You have to make sure that you're following. Again, make sure you're in my Financial Literacy for Women Business Owners group, because that's where I'm going to be posting all the updates that happen as we know them. But importantly, things are just up in the air right now. So there's still a lot that we don't know. Okay, but we're getting more clarity. So Congress is looking at, are they potentially going to extend the date, right? Like right now we have to use it within an 8-week period. In general, that 8-week period starts when we get the money. There's a few things I'll talk about in the new application that actually give a little bit of flexibility there, but not a ton. But they're looking at, should we extend that? Should it be 12 weeks? Should it be 24 weeks? There are a lot of things being discussed right now. Now, you might be thinking, well, wait a second, I got this thing 3 weeks ago and I've already been using it to make sure I can get forgiven over that 8 weeks. And that's exactly what you should be doing, because we have no idea if anything is going to change. And therefore, you have to go with the rules that you have in place at the time. They're also looking at potentially lowering that 75% threshold. So right now, in order to get money to pay your rent, your utilities and things like that, you have to spend a certain amount on payroll. And it's a function of how much you spend on payroll, right? That 75% is what you'd have to spend if you wanted your whole loan forgiven. If you spend less than 75% on payroll, then you have less money to spend on rent, utilities, things like that. Some businesses, their opening date might have been pushed out. And so what they really need more than payroll is, money for operating costs. So they're talking about potentially giving a little bit more flexibility there. So there are changes that are being discussed. So make sure you're paying attention to that. But importantly, okay, make sure also that you're not counting on those things, because we have no idea. You know how Congress works. They're gonna hash things out and maybe pass something or maybe not, but we can only go based on what we have right now. And the guidance that we have right now is this PPP loan forgiveness application, plus all the interim final rules that they have over on treasury.gov. They're not the most fun to read, but that's the official guidance that we have. So that's what we have to go off of. So that's what I'm gonna talk about today, is this new forgiveness application and what the heck we do with it, okay? And somebody's already asking, the tracker that I'm talking about. So you already are a month in, exactly, and would love to plan. So the reason that we waited to do a tracker, and it's kind of this balance of making sure you have enough information and making sure that you can, that it's not gonna just instantly change right away, right? With getting things out timely, because that's what's happening to most people, is that you're sitting in the middle of this and you're like, heck, I'm halfway through this thing and things are changing, right? Things are changing. And that is, I feel the frustration from you guys there. So we waited a little bit, and I'm glad that we waited to get out the tracker because of the fact that things were changing. And the way they've clarified now, specifically around the wage reduction and the headcount calculation, is completely different than we were thinking. So some of you guys have a payroll company that have been on it. A lot of the payroll companies have been doing reports. So I know, for example, Gusto had a whole report for forgiveness. Well, then this application came out, and now they're having to replumb the whole thing. So so right now, that's what a lot of the payroll companies are doing. That's also what we're doing. I have spent probably since Saturday, I can't even tell you the collective hours between me and two other CPAs, Bree, who's on here, and Kelly, have been working on this spreadsheet like crazy. It's going to be awesome. So if you guys don't know what I'm talking about, we're making a PPP tracker. This is different than the planning document. The planning document was a little bit more high level. There have been some changes that I'll send out as well for the planning document. That was more just conceptually, how do I need to spend this money? Now we have more details, and now we need to actually be tracking something. And this tracker will help you actually to complete the whole application. So once you put in the information on the trackers, it'll calculate everything for you, and it'll bring it into the actual application, so you know exactly what you need to be putting in the application, and you have your documentation. If you haven't signed up to get that yet, go to balancedcfo.com/PPP tracker. It's not available yet. You'll get on the wait list. You'll get a little email saying it's coming soon. Within the next couple days, you guys, it's really coming. We're just, breeze with me, hundreds of hours probably. Like, it's been a lot. And it's intense. But not in a scary way, in just, we're trying to make it easy. We're trying to make all these calculations work for you guys so that it can just do it automatically. You put in the information that we asked for, and then it's done, and you're not sitting there trying to read through this application and understand, because it reads like a tax return, y'all. And you'll see here in a minute, it reads like a tax return. It's like, take this line, take the lowest of line 7 and 8, multiply that by your headcount reduction quotient. It is not written for a small business owner. That's one of my gripes about it. I think that's fine for people who have accounting departments who can fill this out. But for a lot of you guys who are my smaller business owners, my self-employed people, it's a bear. And we want to make that easier on you guys. So that's why we are doing that for subcontractors. So here's the thing about this is a great question, because I have a lot of you guys that are sole proprietors, you don't have employees. So if you opened up that application, you were probably like, what do I even need to fill out? And as a sole proprietor, as an LLC, no employees, right? I'm hoping, I have my fingers crossed that they're going to do kind of like an easy form. So like a streamlined version of this, because it is a little bit unclear. There's only certain things that as a sole proprietor you need to fill in. But there's all this other stuff that's confusing if you're trying to fill this in as somebody without employees. So I'm just like really hoping the Treasury comes out with something that is like a 1 or 2 pager for you guys, that you don't even have to mess with all of this stuff. And you can just say, you know what, I'm out. But if not, we will include, I wouldn't use the tracker. We might include like a 1 pager maybe in the tracker if you're a sole proprietor, or I may do a separate one on that. We'll see. That's to come. So sign up for it so you can get it. But then when we know a little bit more about whether they're going to do something different for sole proprietors, I will absolutely let you know. Okay. I am not charging anything for it. This is free. I know you guys, I'm right now in this season. I want to serve you. I want to help you. I think it's really, really important to me that I don't charge you guys a dime for this. And that's the same decision that the 2 other girls who are working on this have decided. We're not going to charge for it. All you have to give me is your email address, y'all. That's it. That's the cost of this thing. And that's just an important thing to me. Now, I have things coming up. I have a launch coming up next week, not next week. I wish next week, next month, June, I'll be selling my course, which is going to be a financial fitness formula basics course. It's going to be kind of the basics. If you've been sitting through this thing and you're like, oh my gosh, this made me realize that I do not understand my finances at all. And what is, we're going to talk through a P&L, a balance sheet. We're going to talk about the different types of taxes that you pay. It's going to be like a crash course in the basics. And that's what I'm working on right now, because I've had a lot of people tell me that that's something that they need. So if y'all want to pay me, that's what you can pay me for, but not this spreadsheet. Okay. Okay. And you can also pay me by liking, go subscribe to my YouTube channel. Go follow me on Instagram. I'm just Jamie Troll over on Instagram. All of that stuff for small business owners is like money to us, right? You would be surprised the impact of just gaining followers and things like that can have. Okay, so, thank you, Bree. Bree's got me. Yeah, YouTube, Facebook, Instagram, and my Corp. Thank you. I'm just going to put this up. I didn't even need to talk about it. Okay. And thanks, Catherine. I look forward to having you. I also have a full signature course if y'all are wanting to do like money management. How do I make sure I'm making a profit? How do I make sure that I'm being able to pay myself? All of those things are in my signature course, which I only do once a year, which will come out in the fall. So I also have waiting lists for that. Bree, you want to, since you're in here, she can drop my waiting list down below because there's a waiting list for the short course that's balancedcfo.com / I'm forgetting now, FFB waitlist. And then the one for my long course is balancedcfo.com / FFF waitlist. So it's Financial Fitness Basics or Financial Fitness Formula. Those are my two courses that we can use. Okay, so let's talk about this. Yeah, so I'm going to jump in. I see you guys starting to ask some questions. So I'm going to jump in. I'm going to share my screen and we're going to look at the application. So we're going to walk through some of this application so you guys can see it with your own eyes. I will say that when I opened this, I opened it on a Friday night. I don't know why I opened it on a Friday night. I was getting ready to sit down with my husband, watch an episode of Billions, and I saw that it came out and I opened it and it wrecked my night. It wrecked my night. And I woke up with a totally different perspective on Saturday. And I said, you know what, we're going to work through it. I was hoping they were going to make this stuff a little bit easier to follow for people. I was hoping they would have a little bit more understanding of small business owners and how the fact that this is complicated makes it difficult for you guys to figure out what you need to do now. So regardless of the fact that, yeah, you might be able to pay somebody to help you with this on the back end potentially, the point is, this needs to be understandable so that business owners can make decisions about what they do with the money. Because a lot of you guys are going to be trying your best to get this forgiven and potentially at risk for a technicality to get in the way. So that's why I'm here. That's why I want to help you through this. That's what I woke up Saturday morning and I just said, you know what? I'm going to help people figure this out. That's my role in this. And it doesn't help to be mad. It doesn't help to be upset about it. It is what it is. And right now, unless they change something, I'm going to give you guys help on it. So let's look at this. So it's an 11-page application. If you haven't looked at it, it's 11 pages. Now, for my sole proprietors, my LLCs, those of you with no employees who are sitting here, like I said, most of this does not apply to you. So don't freak out. There's literally like 4 lines of this thing that are going to apply to you. And that's why I really think they need to do a streamlined application. But for those of you who do have employees, it is going to be a little bit more of a task. Okay, it's going to be a little bit more of a task for you to do. Thanks. And Bree's dropping my links down below. So let's talk a little bit about what some of the things are that I noticed in this. I can't talk through the whole thing because literally we would be here for 3 hours and nobody wants to do that. So let's talk about some of the newer things, some of the things that I think are worth calling out. And if you saw I have another YouTube video too, where I gave my initial reactions. Some of these are the same things. So it does ask you for your EIDL advance amount. It does ask you for your EIDL application number. I'm not sure. A lot of people have asked, what if I don't know it? I don't know. I would just put in the amount. I don't think they're going to disqualify you if you don't know what it is. So what they do with that information, and you'll see it when you get to the actual application, your EIDL advance will be subtracted from the total loan forgiveness. Okay. So you'll go through the whole process to figure out forgiveness. And then once you've figured out, okay, I'm due $15,000 for forgiveness. If you got a $5K EIDL advance, your forgiveness will be $10,000. What does that mean? It means your EIDL advance, not a loan, your advance, the grant portion that you've already received, if you've gotten it, becomes a loan under PPP terms. So you pay it back over 2 years at 1% interest. This was part of the CARES Act. The Treasury guidance had been a little bit unclear about which way they were going to go on this, but we were pretty sure they were going to make you subtract it, basically saying, you know what, you can get both loans. You can get the IDL loan if you want to, and you can get the PPP loan if you use them for different purposes. That's fine. But the grant, since they're both free money, they're not going to let you get the same free money twice, right? So that was really what they were saying. So that's something I think that surprised a lot of people. We've been talking about that for a little while, that's probably coming. I don't know, you guys can probably hear they're doing a bus parade outside right now, so it's a little loud. We pretty much knew that was going to come, but it's now in print. Now, some of you guys got your loan, and if you had already gotten the advance at the time that you applied for the loan, your bank may have asked you if you had gotten that advance, and they may have already subtracted that off of your loan. So you need to know that. If you're not sure, then try to figure out, like, okay, did you get the full 2.5 times payroll or not? And if you didn't, it might have been because they subtracted off that advance if you told them you had gotten it. Now, they won't know otherwise. You would have had to tell them, yes, I got the advance. It's not coordinated enough for them to be aware of even though it's all the SBA, they were relying on you to tell them that. So in that case, you want to make sure that it doesn't get double taken off, right? So when you fill this out, you need to make sure that in talks with your bank, they don't take it off again. But the EIDL advance will be subtracted. Karen says, I prefer not to talk or look at it at all, but I guess this is necessary evil. It is, but I'm going to make it easier. The spreadsheet that we're working on is going to make it so much easier, you guys. So, but I want you to at least kind of get familiar, because read it one time and then go like drink a glass of wine or something and then know that I've got you and it's going to be okay. But read it, because there may be some things that you pick up that I'm not talking about here. Let's see. So when you didn't get the full amount, you should have as PPP, and with EIDL, you are below 10,000. What if you didn't get the full amount you should have as PPP, and with EIDL, you're below 10,000? I'm not sure if I follow what you mean. If you got, like, some people got a really small PPP loan and like their advance was a lot bigger, in that case, basically your PPP just doesn't get forgiven, because if you get your PPP totally forgiven, they're just going to subtract off a portion of that EIDL advance. So it really almost doesn't make sense to have a PPP loan if your EIDL advance was larger, if that makes sense. So I posted about that in the group yesterday. Okay. And the 75%, so importantly about the 75-25, the 75% only matters in that if you need the full 25% to pay for other non-payroll costs. Okay. So I think we've gotten really wrapped up because the banks were saying, just spend 75% on payroll. If you spend 50% on payroll, but you meet like the wages and the headcount, which I'll get to here in a minute, then you still can get forgiven for that 50% of payroll. Okay. You won't have as much, you won't have a full 25% in that case to use on non-payroll costs. Okay. So I think that's important, because I think people are like, oh, I'm not going to get it forgiven at all if I don't get to the 75%. No, you can still get a portion forgiven. And in some cases, it might make sense to only spend a portion and not try to get the whole thing forgiven if you don't need that extra money for rent and utilities, right? So think about what you need from that regard and back into it. But to your question, what I would do, what I think is the easiest way to think about it, is just look at PPP separately and say, okay, I got a 20K PPP loan. I'm going to spend all of that to make sure I get the full PPP loan forgiven, right? So they're going to, let's say they would forgive 20K of it. But I got a $3,000 EIDL advance. So I know that at the end, I'm going to have to subtract 20K minus the 3K, and I will be forgiven for 17,000 on my PPP. I'll be left with 3,000 that turns into basically a loan. I would do it that way rather than taking your PPP, subtracting the money, because I think it gets a little bit confusing to think about it that way. That's what I would say I would do. Okay. So if you accept your EIDL loan advance after your 8 weeks, PPP is up. In most cases, I don't think they're still going to be giving out advances really that far, into the future. Now, they have started giving the advances in a lot of cases when you accept the loan, if you didn't already get the advance. So maybe, but I think that more than anything, like by the time you actually apply for forgiveness, and we don't know how long it's going to take banks to be up and running. I don't know if it's going to be right after the 8 weeks. I would not guarantee that they're going to be ready for you to apply immediately when your 8 weeks is up. So I would say, I don't know that you're going to be able to do that. And I wouldn't necessarily count on being able to keep the advance, because it does say that it's supposed to be subtracted. Okay. All right. So there's lots more questions, but I want to get through. Let me get through this application because I think some of your questions will be answered. And then at the end, if you still have the question, you can ask me. A couple other things that are important on here: covered period, alternative covered period. What? So forever we've been hearing your 8 week starts when you get the money. Your 8 week starts when you get the money, right? And it does. Unless for payroll, you decided to use the alternative payroll covered period. This is new. This just came out. I think the AFCPA was asking for them to have more flexibility around payroll costs so that you could align it with your actual payroll cycles. So a lot of people asked, okay, I got my PPP in the middle of a payroll cycle. What does that mean? Like, how do I do this, right? And what they're saying is, yeah, that adds some complexity. You can start using the money if you normally, and this was something I didn't realize at first, so some of you guys asked this question, I might have answered you wrong, but if you have biweekly or more frequent payroll, okay, so meaning if at least every other week you're doing payroll. If you're doing monthly, you can't wait that long. So some of you who asked me that question, I take back that answer because I did see that borrowers, it's only for borrowers with biweekly or more frequent payroll. You can elect to calculate eligible payroll costs using the 8 week period that begins on the first day of the first period following your PPP loan disbursement date. What does that mean? Let's say you got the loan on May 5th, right? Your payroll runs from May 1st to May 14th. You can start your 8 weeks for just payroll, not the other stuff, just payroll on May 15th, the first day of that next one, so that you can kind of align it a little bit easier. That's what they allowed. Now, here's the other thing I find really interesting. Okay, this is important, you guys, and I hope they come out with some definitive guidance on this. But they also say in here, what is payroll? And I'm trying to see if it's on this. It might be on a different page. Hang on, I'm going to come find it. Okay, on the second page, it says eligible payroll costs. Borrowers are generally eligible for forgiveness for payroll costs paid and payroll costs incurred during the 8 week covered period. Payroll costs are considered paid on the day the paychecks are distributed. Payroll costs are considered incurred on the day the employee's pay is earned. So the Treasury guidance previous to this seemed to say a cost had to be both incurred and paid in the 8 weeks, meaning, okay, I can't prepay these. I can't pay back. If I hadn't paid payroll for April, it wouldn't count, right? So only if the cost was incurred and paid during the period. So that 8 weeks of payroll that you paid during the 8 weeks and that you incurred during the 8 weeks. This seems to me, I don't know what you guys think, but this seems to me to be giving some flexibility there. I'm curious. I would love for them to say it outright that says, look, yes, you can back pay. If you were due to pay your employees for the month of April, right? And you got the loan in May, you can back pay them. Now, that's not going to work if they were on unemployment because, right, that would be double dipping. So if you're back paying employees that already took unemployment, that's not going to work. But if they didn't, if they were still employed by you technically during that time period and you were owed money, that may count, you guys. So that's how I'm reading this now, which is different. And I think what's happening a little bit, if I am to kind of parse into this, I think the fact that it was so prescriptive is the reason that they're looking at congressional changes, right? But I think in absence of that, they have maybe loosened the rules a little bit such that it makes it easier to hit that 75% payroll, okay? Because if you can, now, can you prepay? I don't know. I mean, it seems weird to prepay salary, and I don't think that's really in the spirit of what they were trying to have people do. But this does not seem to preclude prepaying, right? So like, okay, during my 8 weeks, I'm going to pay you for all of next month so that I can get that forgiven. Maybe. So again, still waiting on like final, like somebody write this out in an FAQ, please, so that we're positive on what you can do. But that language seems to give a little bit of flexibility. Same type of language is sitting down here below in the eligible non-payroll costs. So a lot of people were like, well, is it rent incurred? Can I prepay my rent? Can I pay rent from last month that I haven't paid yet? This is a very similar thing. An eligible non-payroll cost must be paid during the cover period or, not and, or incurred during the covered period and paid on or before the next regular billing date. Meaning, so like if your 8 week period ran up and your rent for that month, or maybe not rent, but utilities, right? Utilities are usually in arrears. So you had to pay PPP for the entire month of May, but you don't receive your utility bill until June 5th. And maybe that was outside of, it wouldn't be, but if that was outside of your period, that would count. So because it was for the period in the 8 weeks. But then this seems to leave open, this incurred, paid or incurred seems to leave open that, okay, well, if I am paying utilities from last month, that counts. Or if I'm paying maybe even prepayments for next month, that counts. I don't want to say definitively, because I really think they need to put it in print one way or the other. And having us have to read into the wording on these things is one of the things that's like keeping me up at night, because we're trying to give the best advice we can without official, yes, you can do this answers, or no, you can't, which is what we want and what we need, right? Anyway, so I thought that was really interesting, and that's something for you to think about in how you're using this, that might give you a little bit more flexibility. If you were worried that you weren't going to meet that 75%, or you weren't gonna have enough to pay on payroll, that does open up some potential avenues for you, I would say. Okay, so going back up, basically these first 2 pages are talking about the application, how to fill out the application. So again, when I say like, it's kind of like a tax return, add line 1 through 4, subtract line 5 if the amount is less than 0. I mean, it's a whole, it's all interwoven. And so this is what we're trying to create in the spreadsheet, so that you don't have to, do all of this, that it just automatically fills out where it needs to fill out on the application. It'll like auto fill out that application. So again, that'll be at balancecfo.com/PPP tracker. Depending on when you're watching this video, it might already be available. Okay, so all these are just giving that information. So read it. I do recommend that you read it. Don't get too bogged down in the detail, but just see if you pick out anything that you're like, oh, that's interesting. And if you have a question about it, come ask in the group, because I'm curious, to see what questions you guys have. Okay, so here's the actual PPP loan forgiveness calculation form, right? And here's where you put your information. Again, here's where your EIDL advance comes in. This employees at time of loan application, employees at time of forgiveness application. This is not the FTE. This is for a different purpose. So you can kind of put in like your total number of employees. At least that's the way I'm understanding it on here. Later in the application, it'll get into the full-time equivalent calculation, which is a beast, y'all. Again, we're going to help with that though. So your covered period, if you choose the alternative covered period, okay. If it was in excess of 2 million, why is this box here? Well, because they're going to be looking real hard at those ones. The SBA is going to look at every loan that was over 2 million. I don't think too many of you guys have that loan. And if you do, you guys have like a whole accounting department to figure this out. So good for you. For the rest of us, let's keep looking. Okay, so this is where the whole forgiveness application, I'm not going to run through the whole thing, but this is where you're listing out like, okay, payroll costs, business mortgage interest payment, business rent and lease, business utility. So these are ones that even if you're a sole proprietor, you'd fill this out. As a sole proprietor, you would not have, well, you would have a little bit of payroll costs, and I'll get into that later, but the majority of these schedules and these worksheets wouldn't apply to you. But you would fill out kind of what your expenses were during those 8 weeks. And then it's going to go through these calculations. Again, the spreadsheet will do all of this for you to figure out the answers and to plug it in, including like this FTE reduction quotient. What? That's new. At least the name of it is new. We've known that FTEs, keeping your head count, was going to be important. Here's what I'll say. And we're going to get into a little bit here in a minute what, the specifics, and I'll probably do actually a separate live, I think, on the salary reduction and on the FTE calculations, because those are the most complicated part of this. Again, if you're a sole prop, good for you. You don't have to deal with any of that. But if you are an employer, you got to do a whole calculation of your full-time equivalent. There's about 14, it seems like, different periods that they're talking about in here that get really confusing. Again, why we're putting together a spreadsheet for this, because it's hard for me to even keep all of them straight. Even when people ask me, so what period am I supposed to compare? I have to go look it up, because I can't even keep the 17 different periods they mentioned in here straight. So we'll probably do separate lives just on those concepts. Okay. Because they do get a little bit hairy. But here's the point. If you're like, what am I supposed to do though? Right? Because I think people read this and they're like, but what am I supposed to do here? And what I would tell you is, okay, the main things they're going to be looking at for forgiveness are how much did you spend during that 8 weeks, right? And we just talked about how to kind of come up with what that is and what counts for how much you spent. And they're going to be looking at how many employees did you have and how many do you have now? And there's a calculation of full-time equivalent. So that means that a part-time person is worth like a portion of a person. A full-time person is a 1, a part-time person is a portion, right? So you do that headcount calculation. And if you didn't employ people for like, say the first 4 weeks, right? So you have zeros. If you had nobody, they count as zeros. So you have to average those weeks. So you're averaging out the number of headcount that you had over those weeks. So if you wait, then your average might be too low, but that's okay, because even if your average is less than what your comparison period was, which again, I'm not going to get into what all the different comparison periods are, but it will be in the spreadsheet. If the average comes out less, that could ding you unless you hire back your employees by June 30th. So that payroll period that covers June 30th, if you have the same amount of FTEs, full-time equivalents that you did on that June 30th payroll as of February 15th on that February 15th payroll, you're good, right? For the most part, you hit the safe harbor. Same thing with wages. As long as you're paying them the same thing that you were February 15th to June 30th. Now, what's interesting there is we thought it was going to be like total pay, right? Like as long as the total pay didn't decrease by more than 75%, blah, blah, blah. What it looks like is as long as the salary, if they're salaried and you paid them $40,000 a year and that was their salary on payroll back in as of February 15th, and by June 30th, that salary is $40,000 again, even if you took it down to 20 for a little while, then you hit safe harbor. For an hourly employee, instead of the number of hours having worked and being paid for need to be the same, it looks like in this application, what they're saying is, no. If you paid them $12 an hour on February 15th, that was their normal rate, and then you decreased it to $8 an hour or something during COVID, you just got to get it back up to $12 an hour for June 30th. Okay. So that actually sort of, as much as complicated as this is, that actually simplified things a little bit. Okay. In that, now we're just talking about hourly wages, and not having to go into necessarily like, does it meet 75% of the exact amount you paid them, et cetera, et cetera, et cetera. So that makes it easier. So now the payroll companies who had made reports are now rerunning those reports because that was something that wasn't clear before. And now it seems a little bit clearer that no, it's just going to be like pay rate to pay rate. Now, where your hours comes in, if you paid them for a lot less hours, that can impact your head count, right? So if you had a full-time employee, which was 1 FTE, and you took them down to 0.5, then that can impact your head count. But as long as they're back to full-time, June 30th, then that should kind of fix the problem. So that's my advice to those of you who are like, what do I do though? Bring people back. It doesn't have to be the same people. Head count just has to be the same, full-time equivalent head count by June 30th. The quicker you can do it, the better, because you're going to have a better chance of being able to spend that money, right? If you wait a long time, if you wait till the last 2 weeks, it's going to be hard to spend enough money in those last 2 weeks. But bring those people back and pay them what they were being paid. Total salary and hourly wage. Those two things will likely make it so that you won't get dinged on the forgiveness side. Okay. So that's the practical advice that comes from this craziness over here. That's what I would have you do. So again, we're going to have a spreadsheet that walks through this. Important. I want you to look at, this is always something, and we keep getting so many questions on the PPP loan. And I think it's because people weren't reading the certifications. You are signing certifications. Here's the thing. The banks are not responsible for making sure your application is correct. They weren't responsible for your application in the first place. They aren't responsible for this one. Treasury has basically said they don't really have to do a whole heck of a lot of due diligence around these. It's the borrower who is responsible for making sure it's correct. That's what these certifications are saying. These certifications are saying, look, I followed the rules. To my knowledge, this is all correct. This is not fraudulent. Like, you are certifying. Pay attention to what you're signing, y'all. Okay. So, it's on you. You can't go back and say, well, the bank, even if the bank gives you incorrect information, that's the problem, which a lot of banks are. the banks are going to be held harmless more than likely on this, right? This is you who is responsible for this. And what you're signing here specifically is the dollar amount for which forgiveness is requested was used to pay costs eligible for forgiveness: payroll, business mortgage interest, business rent or lease, business utility. Includes all applicable reductions due to decreases in the number of full-time equivalents. So that's what I was just talking through, that you've done this crazy calculation that I'm going to help you with. Does not include non-payroll costs in excess of 25%. Okay, we know that. And here's the kicker. Does not exceed 8 weeks worth of 2019 compensation for any owner employee. So if you're a corp, you'd be an owner employee, or self-employed individual, general partner. Okay, if you're like a sole proprietorship, LLC, or partnership, self-employed general partner, capped at $15,385 per individual. So it's saying, look at 2019. I mean, we already knew this for sole proprietors, right? Sole proprietors, you take 2019 Schedule C, net profit, line 31. If you're with me, you know what I'm talking about. If you don't, it's okay. But basically, you're taking your net profit off your Schedule C from 2019, divide it by 52, multiply by 8. That's 8 weeks worth of payroll. Similar thing for S Corps. Take your W-2 wages you paid yourself over the full 52 weeks of 2019. Divide that by 52, multiply by 8. That's what you can pay yourself as an S Corp owner, maxed at $15,385 per person. Okay. They are making you certify. I'm not trying to get forgiveness for more than that amount. Now, I've had people question me, and I don't know the answer to this. They've said, well, wait a second, but I use January and February. I'm a newer business. I use January and February as the period for the calculation of my loan. Shouldn't I be able to use that for the period of the calculation of my owner pay? I would think so, but this doesn't say that. So again, that's one of the clarifications we need, which is, okay, do you, in all cases, even what if you're seasonal, right? A lot of people used a seasonal time period between February and September to come up with what their loan would be. And you maybe pay yourself more during that seasonal time frame. Shouldn't that be what it's based off of? Or does it have to be 2019 all in? Right now, this says 2019. So I don't know if they're going to give some flexibility there, but we have to go based on what we know, which it says 2019 is your max 8 weeks of payroll based on 2019. So pay attention to what you're signing on that, because I think that's a really important one. We knew sole proprietors LLCs couldn't give themselves a raise. That was something that was clear on the April 14th interim final rule, that you have to use the 850 seconds. That's the max you can be forgiven. But we didn't know for S Corps. A lot of people were like, well, can I give myself a raise? I can give my employees a raise. That's totally fine. You can totally give your employees a raise, but you can't give yourself a raise to use more of that money, which makes complete sense to me, because they don't want sole proprietors to have windfalls. So why should S Corp, C Corp owners be able to have windfalls as well, right? So you are limited. Important. So read the rest of these too, but this is basically like, it's legalese, but it's important to read. A lot of times we skim over this stuff. Know what you're signing, guys. Okay. You've submitted the correct support. I don't even know, some of these banks might not even be really looking much at your support. So know that you're the one certifying that it's correct and that you've included everything and that you're good. They're going to rely on you for this. The banks are not going to be sitting there spending hours ticking and tying your application. They're just not. They have 600 some odd billion dollars of loans to forgive. They're not going to sit going through yours with a fine tooth comb. That's not licensed though to, skim over the requirements. It just means know that is on you. Okay. Jumping in, if we keep going down, we're on page 5, instructions for PPP Schedule A. Schedule A is kind of a supporting schedule to the actual application. Those are the two things you'll actually have to turn in. So you have to turn in the actual application, which we looked at, and then this PPP Schedule A. There are some worksheets at the back that are just for you to use to calculate out what you need to put on these, but they don't actually need to be turned in for forgiveness in most cases. So this is just going to talk through, it's similar to what we were talking about before. But again, line 9 is where you're going to enter your owner paid. That's where you're going to put your owner pay. Even if you're an S Corp, it looks like that you're not supposed to put your owner pay on some of these supplementary schedules. It just goes on line 9. If you're a sole proprietor, that's one of the only lines you're going to fill out on this whole dang thing. Is line 9. So let's come on down. I'm not going to read all of this, but this goes into the full-time equivalency and the different. So you can, when you're doing your FTE, it's February 15th to June 30th or January 1st to February 29th, 2020, or in the case of seasonal employees, a consecutive 12-week period between May and September. I mean, could they make it more complicated? Again, spreadsheet will work on this, but you're going to basically have a comparison period, and then you're going to have your 8 weeks. How many full-time equivalent average did I have? How many full-time equivalent average did I have? And then they're going to do a calculation off of that. Okay. And there are some kind of caveats there where if you lost employees for particular reasons, it won't necessarily count against you on your FTE. I'll get into that in a minute. So you'll see safe harbor. There's kind of two different safe harbors. There's an FTE safe harbor and a wages safe harbor. Again, if you get, pay them, get your headcount back up to February 15th levels by June 30th, and you get your wages back up to February 15th levels by June 30th, you get safe harbor on both of those, so they won't reduce your forgiveness. I know, y'all. I know you're like, what? I promise it will be easier than this. That spreadsheet will really help you. Okay. So Schedule A for PPP is just where you're going to go through and enter. I mean, this is basically the big calculation of your employer wages. So this is wages and FTE calculations. That's what all of this is. You're going to be able to include your employer contributions for employee health insurance, employee retirement plans, state and local taxes assessed. Remember, here's where we were going to put our information or compensation to owners. So you probably won't have any of this. If you're a sole proprietor, line 1 through 8, ignore them. If they don't come out with a simpler application for you, ignore those. You will fill out this. And then the rest of this, you will pretty much ignore as well. So really the main thing you're going to have is a line 9 and a line 10 if you are a sole proprietor. So, and here's your FTE reduction calculation. Again, it gets complicated. I'm not going to get into all of it. Just work towards meeting that safe harbor. Okay. And let's talk about that for a minute. So average FTE is going to be FTE being full-time equivalent, is going to be not the number of employees you have, right? A part-time person can be 0.25 of an FTE. It can be 0.5. It can be any number in between. It's going to be divided by 40. So if you had an FTE, if you had somebody work 20 hours in a week, 20 divided by 40, that's 0.5. So that week they'd be 0.5. If the next week they worked 30 hours, they'd be 0.75. And then you'd average those out. Spreadsheet will help, I promise. And a lot of payroll providers are also going to be doing this too, okay? So you will have some reports that will help you. You won't have to be sitting there just trying to figure this out all in your head. There is a simplified method that's new. So it assigns 1 for employees who work 40 hours or more per week and 0.5 for employees who work fewer hours. So instead of figuring out like, okay, this one's 0.2 this week, 0.3, you could say every week that they worked, they count as 0.5. If it's a part-time, that may help you. It'll make it easier, but it won't necessarily, if you fall under the FTE guidelines doing it that way, you might want to do it the longhand way to see if that gives you better results. Our spreadsheet will have both of them. Okay. Again, balancedcfo.com/PPP tracker. You'll be able to compare and choose the one that is most preferential for you. Okay. Let's see. So, yeah. And so this is what's talking about basically as long as this calculation will use to determine loan forgiveness and the amount that you might have to reduce your loan forgiveness. However, the actual loan forgiveness may be less depending on the weekly FTE. You're exempt from such reduction FTE if the safe harbor applies. Okay, so the safe harbor, this is the craziest calculation on here. I'm going to be honest. This is the one I've been working on a lot to get this into the spreadsheet that will make sense, because there, again, you can see like 14 different periods that we're talking about here and how to calculate it. So don't even, honestly, don't even read that part. Because it will make you go crazy trying to understand what this is saying. Use the spreadsheet instead. Okay, and then similar thing too here for salary, hourly, wage reduction. We've already talked through that to a certain extent. But what I do want to show you is exceptions. So headcount exceptions, FTE exceptions. Indicate the FTE of any position for which the borrower made a good faith written offer to rehire an employee during the covered period, during that forgiveness period, or the alternate, whichever one you choose, which was rejected by the employee. So this is the one we found out kind of last week. I think the Treasury came out and said, hey, if you invite an employee back and they don't come back, document that you asked them to come back and that they refused. This will likely impact their unemployment benefits. They're probably going to claw that back if they continue they should not be able to continue to get unemployment benefits if they've been asked back to a job. Because that's one of the things you certify when you're doing the certifications is that, hey, I don't have an option for employment. So if you document that, I would recommend doing that by email. Then you will be able to not have that count against you from a head count perspective. Okay. And anybody who was fired for cause as well, but it has to be during the 8 weeks. If they fired them back in February, that doesn't count, or back in March, right? If they were fired for cause during the forgiveness period, it looks like it has to be. Or they voluntarily resigned during the forgiveness period, or they voluntarily requested and received a reduction of their hours. So that's happening to a lot of people too. So you would document like, look, yeah, I had a full-time employee. She decided to come back part-time. As long as you have that documented, then you will be held harmless for that. It won't impact your headcount calculation. So they did put some flexibility in here to say, look, we know that things are a little tough right now for employers and they're having trouble getting people back for various reasons. So they put in some caveats. Okay. And then there's that safe harbor. So this is what I'm talking about, where if the borrower reduced its FTE employee levels in the beginning of February 15th and ending April 26th, as long as you restored the levels by not later than June 30th to its FTE employee levels, then you'll be fine. So that's what I was talking about, that I think as long as we anchor back to that safe harbor and the averaging of the weeks gets crazy. And you can try to do that for sure, but the best case to make sure you're good is to just make sure that June 30th payroll has everybody on it. Replace some employees if you need to, do what you got to do. And then, have all this stuff documented as well if you don't have employees come back. So that's really the majority of it. I mean, back here again, you are going to look employee by employee. When you're figuring out the salary hourly wage reduction, the spreadsheet will go all into this and it will calculate this amount for you. It'll calculate this amount for you. It'll do it all for you. Once you enter in the information it needs. Again, there's some crazy FTE reduction safe harbor calculations, but that's really what the majority of it is. And this is just more information about, documentation. Page 10 gives you all the documentation you're going to need. So that's important too. People have been asking, what am I going to need to show to get it forgiven? This will tell you exactly what you're going to be asked for, what the banks are going to be asking you to see to validate the amounts that you're putting in. So it's a lot of the same stuff you use to apply. It's going to be your application, or it's going to be your payroll forms if you're an employer. You're going to have to document the expenses that you spent on rent, utilities, right? You'll need the lease agreements. You'll need the actual payment proof. That kind of stuff that you're going to have to go through. But it tells you for each thing what you're going to need to show. Important. This makes me think of something. One thing that was left out of here that was in Treasury documentation before, when it was talking about what you could use the PPP money for, interest on other business debt. Okay, so that was something that was in the Treasury guidance that said you can use PPP for that. Now it looks like when looking at, you may have noticed, let's scroll back up here a second, but you may have noticed, and if you did, gold star to anyone who did, there's not a line here for that, for interest on other debt obligations. Okay, there's no line there for that. So I think what that means, and what we're implying that means by it being not here, is, yeah, you can use PPP for that. That's an approved use of PPP. Remember, even if you're not getting it forgiven, you can only use it on these things. That's an approved use, but you won't get forgiven for it. So if you were planning to use it on, if you had other loans that you were planning to use PPP to pay the interest, you can still do that. You just won't get forgiven for it. Credit card, some people were going to try to figure out how to do that with credit cards, which gets a little confusing, but credit card interest, it looks like they're not going to allow you to get forgiven for that. So that's a new thing that they finally have clarified that would have been nice to know a couple of weeks ago. But I don't see it on here, and I don't think it's an accident that it's not on here. Okay. So that's really the whole thing. Again, we're turning all of this craziness into a spreadsheet that I have mentioned a bajillion times, balancecfo.com/PPP tracker. We're in the testing phase. Most of it is done. Banks may also have their own systems that they will plumb to get this information, but we wanted something that would actually just fill out the whole dang application for you. Like, here's the information you need. It's going to fill the whole dang thing out. So you know exactly what you need to put in when you get to that point, because banks are going to kind of probably differ in how they do this and how much effort they put into creating something similar. So be on the lookout. That's coming soon, but sign up for it to make sure you get it. Okay. If you still have questions, I'm getting this dang thing off the screen. If you still have questions after all of that, I got about 10 minutes because I promised myself I'm going to keep these things in an hour because nobody ever watches them on replay when they're more than an hour. So if you've hung in here, okay. Aaron has a good question. I saw we can use PPP and auto expenses, including gas. It does say in here that one of the non-payroll costs, let me read you this. One of the eligible utilities, because that's something we've been waiting for guidance on. They gave us a tiny bit more in here, but not enough. So it says, I think that's page 2. Okay. It says utilities, covered utility business payments for service for a distribution of electricity, obviously, gas, water, transportation, telephone, or internet access. What is transportation? Heck if I know, okay? It's probably not going to be your whole auto payment, right? Probably not even a whole lease payment. Although if you have a business vehicle, that might count under your rental, right? Your rent obligations, that could be leases. So if you rent a fully 100% business use vehicle, you may be able to use it there. Maybe gas. Gas is one of those things. Usually when they talk about utilities, it's commodities. So to me, that means like something like gas, right? I bought gas, not gas you're using personally. It would have to be in a business vehicle, whether they let you use one that's split business personal use and come up with some, I don't know. We have very little documentation from the Treasury specifically on what's going to be included for utilities. Here's my concern about this. If they don't come out with this, because there's also a question around, can we use cell phones? Is it just landlines? Who the heck has a landline anymore? What about home, right? What about portion of your internet access at home, or portion of your cell phone bill, or portion of your rent, right? If you work out of your home. Without more guidance from the Treasury, which we currently do not have, the banks are going to make those decisions. And do you think they're going to make them all across the board uniformly? Heck to the no, kind of similar to what happened before. When you leave things up to them, it's going to be a wide array of what's going to be acceptable and what's not. Here's what I can tell you on utilities. Until we know more, document, okay? You are absolutely not going to be able to take a portion of your home expenses if you don't have good documentation of the tax deduction you took last year for that. Your square footage calculation you would have had to do for the home office, how you came up with that, the percentages, the percentage use for your cell phone, the percentage use on your internet. If you don't have any of that and you're trying to just give them your internet bill, it's not going to work. You are going to have to show a good amount of support if you want a chance at them saying, yeah, we can take that. Okay. So that's the best advice I can give you right now for utilities, is just document it. Like, just have it documented. Reach out to your bank and see if they have a stance yet on it. A lot of banks are just saying, we're waiting on Treasury guidance. And they're going to say we're waiting on Treasury guidance until literally it's time to apply for forgiveness, because they're kind of passing the buck. But ultimately, in lieu of, if that Treasury guidance doesn't come out, which it might not, the banks are going to have to make a decision, and they're going to make that not uniformly. So talk to your bank if you can. I know some of you guys, depending on the banks you use, that may be easier or that may be harder to actually do. Okay, let's see. Okay. So yes. So even though PPP must be used on W-2 wages for the owner employee, are draws from previous period in 2019 also considered when calculating the not more than 8 weeks? No. And I'll tell you why. Well, my belief is no on this. It doesn't specifically say in here W-2 wages, but for forgiveness purposes, it has to be paid out in W-2 wages. At least I know that 100% you don't get forgiven if it's not paid out via W-2 wages. Now, whether you can say, well, I'm going to increase my W-2 wages and include some of my draw, that I took last year in that calculation, I don't think you're supposed to be doing that. Why? Because draws are not amounts you took you paid payroll taxes on. Because basically the reason as an S Corp, just, quick here, thought on this, the reason they're only allowing you to use wages is because that's what you paid payroll taxes on, because that's what you said was actually earned income. The rest that you're taking out, the reason you don't pay payroll taxes on draws as an S Corp is because you're saying anything else, that any other profit in the business is more akin to investment profit. It's not active process. It's not earned income. It's unearned income. Therefore, you don't have to pay payroll taxes. You don't have to pay self-employment taxes on them. Okay? So you just pay income taxes, but you don't have to pay self-employment. So to say like, well, I had this unearned income last year that I said was investment income, but now I'm going to use that in calculating what my 2019 amounts were and increase my salary, my W-2 wages this year for that. It seems a little red flaggy to me. That's all I'm going to say for US Corp owners. It seems a little red flaggy to me. Now, I've also had people ask me, well, I wasn't on payroll last year. Can I put myself on payroll? I originally was saying yes, but according to this, I don't know. I don't know what they're going to do if S Corp owners that should have been on payroll all along put themselves on payroll. I also can see that being, I think you should be. If you should be, you should be, right? So independent of this whole situation, if you're an S Corp owner, you should be on payroll. You should be paying yourself W-2 wages that are a reasonable salary. You should have support of how you came up with that reasonable salary, et cetera, et cetera. Those are the rules, right? A lot of people aren't following those rules. I think a lot of people are realizing that right now that they haven't been following those rules. You do need to remedy that fact. I just don't know if it's going to count for you for forgiveness. And I don't know if it's going to be a red flag if you do try to count it for forgiveness and finally put yourself on payroll, if they're going to go back and be like, oh, well, then you should have been on payroll last year. And here's your payroll tax bill that you owe us now with fees and penalties and fines. I don't know the answer there. Know that any forms you give to the federal government, though, are going to the federal government, y'all. So keep that in mind. Okay, let me see what else we have. Aaron says, are we required to file for loan forgiveness, or can we just use it for whatever? Okay, so importantly, you are not required to file for forgiveness, but even if you don't, those funds can only be used for payroll, business rent, business mortgage interest, business utilities, interest on other business debt, nothing else. And that's something that I think there's some misconception around. Well, if it's a loan, I can use it on whatever I want. Nope. It specifically says this is a very low interest loan. It's an emergency loan. It is not meant to prop up your business. It's not meant to buy inventory with. It's not meant to do any of those other things. It is meant for those 5 things. If you don't use it within the 8 weeks, right? So if you're like, okay, well, I'm just going to use it as a loan because I'm not bringing my staff back till August. I have a school and I'm going to bring all those people back in August. And so I'm going to use it on payroll then, or I'm going to use it on rent then, right? Then that's fine. You don't have to get it forgiven. You can use it as a loan. You don't have to apply for forgiveness. But even if you don't apply for forgiveness, that doesn't mean it's a loan that you can do with whatever you want with. Okay, let's see. A lot of questions on commission. So commissioned employees, and somebody asked about tipped employees too. Schedule A, commissioned employees. So it doesn't go, we don't have guidance. We don't have guidance on that. If they are salaried, so I think it depends, right? Like, so a commissioned employee could be either, you could re-engineer that and put that hourly, or you can just consider them like 0.5. That might be the easiest thing is like, okay, if they're commissioned employees, but they work full time, then for headcount, they're 1. For their average pay, I don't know. They have not said how you're supposed to calculate that. If they're commissioned, if they're not salary or hourly, all this talks about is salary or hourly. So maybe we'll get more guidance on what happens if they're neither, right? But if they're salary plus commission, you would just, when you're comparing wages for the purpose of the wage reduction calculation, you're just going to look at their salary, not their commissions. So that, again, was one of the things they kind of clarified, which was the salary. It doesn't have to be the amount that you paid out, has to be at least 75% of what you paid, which is what we thought. They kind of lessened it a little bit and just said, no, their salary just has to be the same, or their hourly wage. If they get bonuses, or if they, then that isn't something you have to necessarily keep up with, if that makes sense. So for a lot of people, it didn't make sense. They were like, well, wait a second. I paid a bonus at the end of the year last year. Now do I have to pay part of that bonus to keep them at that? It didn't make a lot of sense. So basically just make sure those salaries, but if they're fully commissioned, I'm hoping they come up with more guidance on exactly how we need to handle those people. Let's see. Already changed pay periods from biweekly to weekly before they get. Yep, you can totally do that. If it's easier, a lot of people have changed their pay periods. No problem changing your pay periods. Do what's best for you. Okay. Let's see. Okay, if we're not going to be forgiven for the EIDL advance, couldn't we use the same amount for items not being forgiven anyway? So I'm not sure what that means exactly. Couldn't we use the same amount for items not being forgiven anyway? I don't know what you mean by that, lady. So if you want to clarify, let me know, or you can ask it in the group and I'll look at it. My brain may not be working fully this morning. Yeah, so then there is gas. Yep. Okay. So I'm gonna go down to the bottom. If anybody has questions, go to the bottom and ask again, because I can't scroll. There's a lot of conversation between you guys, and I have comments coming in from 3 different platforms, so it can get a little confusing. Okay, let's see. Dahlia says, hi, Dahlia, and she's watching from YouTube. Yay, I'm an S Corp as of 2020. Last year, I was a plain old LLC. Use my Schedule C for PPP. So pay myself on PPP with payroll in the same amount. Yes, so that's what I would do. For people who have changed, if you're a Corp now and you were a Schedule C, I would go back, take your Schedule C, calculate out that income as your 8 weeks, and then pay that via payroll to yourself. That's what I would do. I think that is the most straightforward way to do it, and pay that via W-2 wages. If anybody's looking for a payroll provider, by the way, if anybody is looking for a payroll provider, and I think that's the same comment, Gusto's amazing. And they are like on it with all of this stuff. They've been coming up with reports. It's fantastic. So if you are looking to like hire your first employee or put yourself on payroll, if you're an S Corp, all of those things, Gusto, balancecfo.com/Gusto is my link. I would love it if you use it and sign up for it. But personally, I think it's the easiest. Britton says Gusto. Gusto's awesome. And all my clients who have been on Gusto through this have been like, I don't know what I would have done. So that can really, really help as well. S Corp health insurance and owner retirement included in payroll costs. For an S Corp, yes, your health insurance and your owner retirements would be included in payroll costs that you could be forgiven for. Those count as like employer contributions to payroll. So yes, you can. If you're a sole proprietor, unfortunately, no. Is it required for an S Corp owner to be put on payroll during the 8 weeks to get the loan forgiven, or can I hire someone else? No, you don't have to. You can hire someone else. If you got the loan based on somebody else's, or even if you got it based on your own payroll, I don't know how that would work. I would imagine you just wouldn't pay yourself. I think some people are doing that because they want to continue. They want to be on unemployment, and so they'd rather pay the PPP to somebody else. Right now, that seems okay. But again, anytime you got PPP and unemployment, I can see them asking some questions. So make sure that you have it supported, but you can hire somebody else. Okay. Let's see. Repeat the link for Gusto. Somebody's got me. Whoever got that, thank you. If a 1099 was used to qualify for the loan, can we use it for forgiveness as well? Nope. So they have to be W-2 salary. So okay, this is a good point. If you got the loan, you got more than you should have because the bank told you the wrong thing, or you got confused, or guidance wasn't out yet, or any number of reasons. Figure out what you should have. This is my best advice I can give you. Figure out what you should have gotten. Find out what your 2.5 times average monthly payroll should have been, and spend it like you should, and don't touch the rest of it. Unless you're okay with that becoming a loan. Okay, if you're okay with that becoming a loan, don't do what you want with it. Do one of those 5 things with it. But if you got more than you thought you should have, you're going to be held to the same things as everybody else. Now, some people got loans off their 1099s. I'm not sure, because there's a little bit of ability in the Treasury guidance that you might be able to use 1099s and not always your line 31, but most people are defaulting to know it's net profit. It needs to be net, but some people were allowed to get it off of gross. So I'm curious to see what they do there. And if they come out with a stance specifically on that to say, well, if you used gross before and your bank let you, that you can use it again. Most banks didn't allow that. But if you got more, just be careful and calculate, okay, here's what I should have gotten, and now I'm going to spend it accordingly, versus, trying to get the whole thing forgiven because you may not be able to. Okay. And I'm over my hour. Go figure. If we use the PPP loan amount before the 8 weeks, can we apply for forgiveness early? I guarantee you the banks are not set up to do that. You can check with your bank, but they're still funding people right now. What's happening right now is they're focusing on, okay, get the money out the door, get the money out the door, get the money out the door. Then they're going to switch gears to, okay, we need stances on all this stuff that the Treasury has not clarified for guidance yet. They're probably going to wait as long as they can to get to make sure they can get all that guidance so that they don't start forgiving people and then guidance comes out that they did it wrong. And they're going to wait until, you have to be probably done with your 8 weeks in order to get that forgiven. I don't think any of the banks are going to be ready. I'm doubtful that they're going to be ready even when the 8 weeks is up. Okay. Erica, hey, Erica. So if we get the EIDL advance amount we received, our PPP, does that decrease the forgive? Yes. Does that also decrease the 75? So I wouldn't even look at it that way. I wouldn't even look at that. I would just, it's going to be, use your PPP loan as you normally would, and then know that, okay, if I get 15K, forgiven for PPP, that I can subtract whatever my EIDL advance was, and that's what I'm actually going to be forgiven for. That's how the application walks through it. Don't adjust it first and then try to spend it that way, because I think it just gets kind of the water gets muddied that way. Let's see. Also, I have employees who generally get tips. Can I use part of the 75% for the PPP to account for lost tips? So here's the thing. It doesn't look like you're going to be held to those tips. You had to use those tips when you applied, and we thought that that was going to be this calculation of average pay, that you were going to have to keep up with tips and supplement tips and all of that. The way it's worded now, as long as you, now you can supplement their tips if you want to, but from the wage calculation, it is basically what was their, if they're hourly, what did you pay them per hour? $12 per hour before? Okay, I still pay them $12 per hour. The tips part doesn't come into the wage reduction calculation. So we thought, like, just based on the guidance that was out previously, that it was going to be total compensation compare, but instead it looks like now they're taking a little bit, they've drawn back a little bit, and I think this is their attempt to make it a little bit easier on people, is to say, okay, that was going to be a little bit crazy to figure out. Just make sure their salary is the same. Make sure their hourly is the hourly rate is the same, not even number of hours. Okay, so I don't think you're going to have to necessarily keep up with tips, but if you want to do that to supplement and help your employees out, you absolutely can do that, and that would be forgivable. Do the 8 weeks of payroll need to be for consistent hours, or can we start slowly and ramp up? You can absolutely start slowly and ramp up. It's going to impact your FTE calculation. So let's say you had an employee working 10 hours 1 week, and then they ramp all the way up to 40, they would be worth 0.25 of an employee that 1 week. Then at the end, they're going to be worth 1, and you're going to average each of those payroll periods to come up with what their average full-time equivalent was, if that makes sense. So if you take a while to ramp up, it could impact your headcount. But even if you do that, and that may be the best course for some businesses, as long as you get everybody back, or the same number of employees, at least, doesn't even have to be the same people, back on payroll by June 30th, or have documentation of those exceptions, you'll be okay. So yeah, you can totally do that. Let's see. Okay. So Chase has already set up a separate account with the total PPP amount. Not sure what that means, but yeah. So banks are doing all kinds of different things. They're doing crazy things sometimes. How are you able to restore FTE levels to prefab by the 30th of June when your 8-week period ends prior to that? So it doesn't say when your 8-week period ends. It just says by the end of June. So you're going to be applying for this thing at the end. So you're going to have your average over the 8 weeks that was your FTE. And then if it's not enough compared to your average from the previous period that you're going to be able to compare it to, again, there's some questions around, like there's some choices there, but if it's not enough, right? Then the safe harbor kicks in. And as long as you get people on by June 30th, even if that's after your forgiveness period, that you can get the safe harbor. So again, I don't think they're going to let people apply for forgiveness for this until at least after June 30th for that reason, because they're going to want to see those amounts. FTE calculations, owners don't count even after, it doesn't look like it. So that was something that is interesting. It looks like you guys there's a separate line for owner pay. You don't put yourself on those schedules. So it looks like you're not included as an FTE, either in the previous period or after. You just have a separate line for where you put your payroll. So that's an interesting thing as well. The link, so do the HTTPS /balancecfo.com/gusto. You can also go to balancecfo.com/vendors. It has all my different preferred vendors. Gusto's down at the bottom. You might be able, I can't remember if that one I have a discount link for or not. Some of them I do. Let's see. They recommended getting a separate bank account. Okay, so this was Chase, I think. That would mean ordering new checks for the account to pay for it. Won't that take a good amount of time? Any ideas? Personally, I think the extra account thing is a bit overkill, and I think banks are asking people to do it because they get more fees. I don't think you need an extra account. I think if you want that for peace of mind, sure. You can also, like, what some people are doing is getting an extra account, but then reimbursing, like they're continuing to run payroll out of their normal account. And then they're calculating, okay, how much of this comes from PPP money, and they're reimbursing themselves. You don't have to do that. What you're going to actually show is just your payroll reports. You might show those disbursements too coming out of your bank statement, but it doesn't necessarily need to be in a separate account. It's not a requirement. Somebody must have asked this. So no, you can't use 100% on payroll as an LLC. Thank you. You're forgiven for 8 weeks based on your 2019 Schedule C, line 31. I have several posts in the group about this one as well. You are limited, and it looks like everybody's going to be limited at 8 weeks of pay based on 2019. It's just a little bit different how you get to that number, depending on if you're a corp or you're a LLC sole proprietor. If you're an LLC sole proprietor, it's going to be your Schedule C. Okay. We are paying employees to stay home some days. This actually helps us to increase our FTE. Yeah. Yep. They worked 30 hours just before. Now that we have PPP money, we're calculating the time as if they're working 40 hours, even though only 30. Yep. That's totally fine. You can increase. They don't need to actually be working, y'all. And that's the thing. People are like, is it going to affect my PPP if my people aren't working? No, that's the point. They want you to pay them anyway. They want to get people off of unemployment, et cetera, et cetera. And some people thought that it would impact their PPP if they went back to work. No. So it's not like unemployment where you can only make a certain amount of income, and then that's not how it works. There's a little bit more to it. Okay, so Bree's got the link here for Gusto, my actual official link that it's a redirect. So, that's the actual official link down there in the comments. Okay, that's for Gusto. Okay, so I'm going to take one last question, y'all. Last question. I can't even read the whole thing. I'm going to put it up here. Let's see. Oh, no, I hate it when this happens and you can't see my face. Okay, my PPP 8 weeks ended on June 12th. I have my full staff back since day one. At the same level, pay hours. Awesome. Do I need to continue to pay my staff through June 30th as I am now? The wages for the last 2 weeks won't be paid until 6/22. Can I give them bonuses? Sign up and okay. So quick, I can't see your whole question for whatever reason, but what I will say, I think, is what you're asking. Do you need to pay them through June 30th? I would keep people, even if your 8 weeks ends early. So if it ends June 15th, y'all, I would keep them on through June 30th because, again, if you don't hit the average during your 8 weeks, they're going to look to what you had it as of June 30th. And as long as that's good, you're good. So I would probably err on the side of that, unless you're totally fine and your averages are going to be fine. Then you can lay them off if you need to, or whatever you need to do. But that June 30th is an important date. Yeah. Okay. All right. Cool. So thanks, guys. I went long. Always. Will this be reposted? Oops. Oh, thank you. Meant to do this one. Will this be reposted anywhere to listen again? Yes, it's always on replay in the group Financial Literacy for Women Business Owners, or it's going to be on my YouTube channel. Jamie Troll is my YouTube channel, or it's going to be on my Balance CFO page as well. Balance CFO-Jamie Troll. Find me in all those places. Please like me in all those places. Subscribe on YouTube. All those things. I'm going to keep coming up with more information. Again, sign up for the PPP tracker that will be coming out soon. BalanceCFO.com/PPP tracker. I'll do another live on that specifically to walk you guys through it. And I love y'all. And I'm out. Have a happy Wednesday. Bye, guys.